Good morning, all. Hey, welcome to hard to believe Tuesday, July 21st. July is going to be over. School's going to be in session. Man, this year is running fast, even with all the stuff going on. Yesterday, it was a day, and the markets ended up bouncing back pretty good. We'll have to continue to keep an eye on them today. A lot of things happened over in Europe, and that'll be part of our discussion today, as well as earnings. As they start to pop in, we're seeing some big names like Coca-Cola, Lockheed Martin, some of those guys coming in today. Looking forward to our conversation with Dave to see what he can add to the conversation today. Not much macro stuff going on, but please join us for a lot of good information.
7 Light FM. See ya. Morning, Dave. 8:38 now. It's 22 before 9. What, Sam Hill's going on with your 401k and IRA? Well, the short answer was needed from yesterday. Pretty good news. Let's see if it continues today with a look at finances up on Wall Street. Phillip Statler is in his office at Statler Financial Services in downtown Sebring. Good morning, Phillip.
Hey, good morning. Hey, coming to you from home this morning. I'll be in the office in a little bit, though, but starting out at the house.
Well, it's a good way of letting the ladies know you're running a little late, right?
That's right. Exactly.
Think of us as a 20,000-watt message service. We start out with yesterday's closings. Things look pretty good on Wall Street yesterday. Dow was up by 8. Standard & Poor's was up by 27.11. And then came NASDAQ up 264 points, plus 2.5%. Wow, things went crazy. You and I were kind of noodling it through before we went on the air. Some of it, NASDAQ got whacked a lot harder last week during the couple of days of sell-offs we had. You'd shared that China stocks had been recovering real well yesterday, and there are a few rumors about a vaccine for the coronavirus. Don't know what, but it sure was a day on NASDAQ, wasn't it?
Yeah, it really was. They just kind of blew it out of the water. Really helped propel them for this week. And so at this rate, they'll have a good week, even if they just break even the rest of the week.
Yeah, holdings after 2.5% in one day, you can pretty much mark time for the rest of the week and be on the safe side. Everything pretty well up, and I'm seeing a lot of green ink this morning, a lot of it on the Dow, due to two stocks that kind of surprised the world, among others, one that came out last night. IBM did okay, I gather.
IBM did. They came out and beat by about 11 cents a share. Revenue beat forecast too. That was a big deal for them. They had a better than expected results when it comes to their cloud software sales, and even their mainframe revenue. The big old computers even contributed more than expected, among other factors. They're not up. At least they weren't up. Yeah, they're still up pretty good. They're up 5.25% this morning before we get going, and they're inching up, trying to get close to the 52-week high, but they're still got a little ways to go.
That one caught my eye primarily because being part of the Dow 30, and it's a price-weighted index, when we get to the numbers, the Dow is up pretty spectacularly at the moment. A good chunk of that increase comes from IBM, and I gather Coca-Cola as well this morning, right?
Yes, sir. Coca-Cola also came in about 2 cents ahead. Revenue was basically in line. Here's the deal. I thought this was interesting. It was the 23rd time in 25 quarters that the company beat the Wall Street forecast. Now, that sounds really good, and it is, because the analysts, they go in there and try to figure out what the company's going to do. However, their revenue was down 29% from a year ago.
I noticed that their revenue fell, but they were still going up like crazy on the market. That kind of gives some faith in management doing more with less, doesn't it?
It does, and that's the biggest decline in revenue since 1990.
Wow.
Yeah, and they are trading up. They're up almost 3% this morning.
When you can't sell Coke, you know the economy's in trouble, right?
Yeah, that's for sure. That's for sure.
Before we get to other things on earnings season, we got a bunch of tidbits, too, that came out. One thing that I hadn't heard of, you mentioned before we went on the air, one of the great old names in small engines, I'll bet 80% of folks have one of them in their garage, Briggs & Stratton declaring bankruptcy. Holy crud.
Yeah, they came in, they filed Chapter 11. bankruptcy. They've already got a suitor in place that's basically going to take them out. It's called KPS Capital Partners. Sounds to me like it's a hedge fund, a Suncon, or a venture capitalist firm or some sort of another. But they're going to come in and buy Briggs and Stratton. But evidently there's some debt they need to get rid of, and so they're filing bankruptcy first, and to get things lined up for that sale.
I didn't know of a lawnmower when I was growing up that didn't have a Briggs and Stratton engine on it. I mean, that's kind of like, putting a mustache on the Mona Lisa with Briggs and Stratton going under.
Yeah, I thought that was the only thing that made lawnmower motors.
Yeah, for a long time it was. Then a lot of the Asian makes came in, and we started seeing a bunch of other names. But boy, that's it ranks up there with Harley as one of those old great American names. Another tidbit I came up with as I went through there: you can be owned by Microsoft and you can still lose your job. LinkedIn, the professional social network, to use their marketing term, they're cutting about 10% of their workforce, 960 people. Evidently, you and I haven't been logging onto our LinkedIn accounts enough lately, huh?
It's not logging in; it's paying that advertising bill and putting those ads out there on LinkedIn to raise revenue. That's what's happening. People are cutting back their ad spends across the board, and so social media is getting hit just like other forms of advertising. I know the radio probably gets hit with issues when people start pulling back their ad budgets.
I've always said that when retail catches cold, media catches pneumonia. And it doesn't surprise me a bit, especially in that secondary tier of social media. I mean, Facebook, quote unquote, being the big leagues. LinkedIn is big, but they're nowhere near as big as Facebook. And what happens? Number two gets cut out in order to keep number one, right?
Well, you're right. That does happen a lot. And it's a targeted market, right? LinkedIn is looking for professionals, and Facebook is not. It's really looking for everybody and anybody.
I mean, all those Amway distributors that are asking me to connect with them on LinkedIn aren't their target market?
No, not really.
I get like 5 a week from Amway distributors and vertical marketing folks. It is still earnings season, and we got a few others other than those two stellar ones on the Dow that caught our eye. Lockheed Martin, we've been watching Boeing so much, but they're not the only airplane manufacturer in the country, are they?
They're not. And Lockheed Martin did well, too. They beat by 7 cents a share. Revenue came in above forecast. And here's the deal for them. They raised their 2020 full-year guidance forecast. So, man, we don't see that very often anymore, do we?
Not in aircraft, especially.
Yeah, and they're trading up almost 3.5% this morning.
Lockheed, I know, does real well with federal government contracts. Did you get any drill down on that? Are they looking at their growth being in government contracts or on private sales?
It didn't really say. It didn't. My little tidbit hasn't gotten that far yet.
Kind of curious on that front. It's kind of hit. Another one that we heard of that reported was Phillip Morris, and they're much more than tobacco these days.
They are. They beat, too. They beat by 19 cents a share. Revenue came in, again, above forecast. And they also, like Lockheed Martin, they gave full year outlook as a mostly above what the street was looking for. So a good thing for Phillip Morris. They're up again 3.5% also.
Now again, they're consumer goods, and actually giving out guidance really comes as a shock. Are we starting to see a trend with this earnings season? Folks going out on a limb?
I don't know. We'll have to see. I did see somebody they didn't give earnings yet, but Novartis, they came out and cut their 2020 sales outlook. So I think it's going to be industry dependent, and going forward, we'll see what happens.
That's kind of interesting. I mean, last quarter it was all nobody giving guidance. Now all of a sudden we're seeing it, and they're sometimes surprisingly good. Got any other indications as earnings season continues? I know it's kind of light in terms of details this morning with a whole pile of secondary stocks.
It is. We had a whole bunch more of local regional banks, financial institutions reporting, and they all, I say all, most, and probably 95% of them are coming in, beating expectations. I did see one or two that missed their earnings. But for the most part, we're seeing the financial institutions beat their estimates and going forward. The only other one I don't have details on it either, it trades on a different a foreign stock exchange. But Logitech, it's a big deal, you know. I mean, I know my mouse is made by Logitech. My keyboard's made by Logitech. So, you know, they're pretty big name when it comes to technology, and they had a big beat. I don't have the exact details, but I know it was almost 50% more than what was expected on their earnings side. And they raised their 2020 outlook. So here's another case where they raised their 2020 outlook going forward. I don't have, because it's traded on different Swiss exchange, there's not any quotes right now.
You know, that actually, when you think about it, that makes some sense. If it plugs into your computer, odds are Logitech has their fingers in it somewhere. With all the work from home stuff and new mice and keyboards and stuff for people taking their home computers and using them for work, that almost makes some sense, doesn't it?
It really does. You know, it's one of those things that's taking advantage of that sector of people working from home and upgrades computers so that they get better connectivity and that type of stuff.
Understood. So like we said, it was kind of a quiet, slow week so far anyway, as far as economic news is concerned. We actually get to trade stocks based upon the value of the companies involved, which is kind of a novel idea. We can kind of cross our fingers for no news rumors to mess things up, right?
Exactly. You know, that's, and who knows? I mean, see, you still got the coronavirus still happening out there. We're seeing things like LinkedIn laying off people. You know, we saw other people yesterday laying people off. So I think that's going to be a continued underlying theme. That's going to be just a here and there type of thing that's going to continue to come across our tickers.
It's going to be a battle back, without a doubt. We'll just cross our fingers we end up winning the battle at the end of it all. I said green day yesterday, exceptionally green for NASDAQ. 45 minutes before we opened this morning, Phillip, are we keeping the green momentum going?
It sure looks like it, Dave. Everything is looking good this morning again. Everything's up between 6 and 7/10%. The Dow is up 163 points. The S&P 500 up 22. NASDAQ's up almost 76. So good numbers there. Even good numbers on the other side of the board when we look at commodity side. Silver, man, I got to look and see what's driving silver because it's having a second banner day, up 6% this morning to $21.40 an ounce. Even gold, yeah, you have to go find you some, huh? Gold's up 1.2%. Up, it's getting close to 1850. It's 1840 an ounce right now, and then even crude oil's heading the direction we want it to go right now. It's up almost 2.5%, 41.93 a barrel.
And I'm cheering for the day when I can complain about prices of oil being too high again. 42 is getting up into relatively healthy range, isn't it?
It is. I mean, we're getting close to that 45.
Absolutely. Overseas markets kind of following our lead. You'd mentioned yesterday that mainland Chinese markets went to town. They continued up today. Hong Kong caught up this morning. They were up by 2 1/3% at the close early this morning. Japan continued its uptick as well. It was up 0.75% at the close. European markets also evenly up after they finally came to an agreement in the European Union about a stimulus program for their people over on that side of the pond. Phillip, everything looks so doggone good today, but like you say, there's always flies in ointments and clouds on the horizon that could cause misery. That takes solid, unbiased advice. How do I find you to get it?
Evan, give us a call at 863-382-0037. They can follow us on Facebook at Statler Financial Services, like and follow our page there, and then catch us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday mornings on Highlands News Talk 730.
All righty, and back here again tomorrow morning with an up-to-the-minute look at what's going on Wall Street. Phillip, thank you so much. We'll see you then, all right?
All right, man. You have a great day.
You too. Be well, my friend. 105.7 Light FM and Statler Financial Services, Phillip Statler.
Folks, let's don't take a wait-and-see attitude about what's going to happen in the marketplace. Let's make sure that you're prepared for whatever comes next with this market, whether it shoots higher or it drops off. I want you to be prepared. Give me a call. Schedule your financial x-ray, 863-382-0037. 0037. Have a great day. I look forward to speaking to you again tomorrow.